Man, do we have a lot to cover in this video. First, we're going to talk about Palantir's earnings report and conference call, and I'm also going to share my thoughts on ARK selling Palantir. But let's go ahead and dive right in. The first thing that the CEO Alex Karp displayed on the screen was the US commercial cohort growth slide. The company right now is extremely focused on this sector, which honestly probably has the largest TAM at the moment. And that's why it's really strange seeing Cathie Wood sell her Palantir shares because of the decrease in the government growth rate. When Karp was asked about the government revenue growth reduction, I think he gave a really strong response. In order for government revenues to grow, you need large deals. He said that there will not be a deceleration over time. But then the question becomes, if the baseline is 30% revenue growth, then how do you ramp back up when you only were able to grow 26%? What happened is that most of the bigger deals closed at the beginning of the year. And so many of the smaller deals happened later in the year, which shows the revenue growth reduction. Another thing to consider when looking at the government deals, the US government would not want to leave this product that is helping them in this dangerous time. Now, Alex Karp talks about this progression going from the US government to the US commercial and then to the rest of the world. This is important because where does the US get most of their materials to make these fascinating products? It's not other US companies. Many times it's international. And so being able to expand into these international regions will not only grow efficiency overseas, but it will also improve the US economy. And that gives Palantir the ability to continue to raise prices with their sticky product. There is one thing in particular though that Karp said that I really think people need to remember. For most software companies, the number one customer isn't the client buying the product, but it's actually the software analyst looking to buy the company. And I truly believe that's why we see such drastic high forward PEs for these software companies. Palantir is much more focused on the client. And when we look at the best companies right now, they follow a much similar pattern. Palantir doesn't need to impress analysts with such an eloquent speech because quite honestly, their product is the best salesperson they have. Karp mentioned that now they're in a place where they don't need to go to these companies to pitch the product. But because of what the companies have heard from other companies, they are now coming to Palantir wanting the product. Now, something that I think needs to be established is the difference between dilution and stock-based compensation. When we look at Palantir, they're barely diluting with about $9 million going to dilution with a company that has a market cap over $20 billion. Alex Karp admits that they were not focused on the DPO, but they were actually more focused on the product itself. And in all honesty, I would prefer that anyway. When we consider what Palantir is going to do, they're going to ride and die off of the value that their product brings. If they don't have an amazing product that is one of the best, then their company won't succeed. Palantir needs to make sure that their product is top notch. And once more companies start coming to them asking for the product, analysts will start to recognize this and they will start flooding into the company. But until then, I'm perfectly fine with where they're at. But the one thing that I will say about Alex Karp is that he is extremely real with everyone. He admits there will be a normalization when it comes to showing numbers to analysts, but also staying true to who Palantir is. And that is by showing data in a unique way that demonstrate what are the best moves for the company moving forward. When it comes to stock-based compensation, Alex Karp talks about there are two questions that need to be evaluated. First, how are they comping people? And will there be a normalization in the near future that will be similar to other software companies? And the true question that revolves around all of this is what is the profitability going to be like for this company over time? Which he firmly states that there's going to be a normalization to other software companies when it comes to their stock-based compensation. That means that we could start to see solid signs of profitability over the next 18 months. One other thing that Alex Karp continued to speak about was that Palantir was built for bad times. And I think especially in the day we're living in right now where there's so many fears of recession, interest rate hikes, etc., that is something that is extremely intriguing for other investors. They currently have no debt and over $2.3 billion in cash. Plus their product is focused on building strong businesses no matter what the environment is. And personally, as a shareholder, I want to be invested in a company that has a really strong foundation because the wider the base of the building, the higher the building could possibly go. And on top of all of this, Palantir is making sure that they're hiring the best engineers possible. And that's why their primary growth is investing in the product itself. When you think of some of the best companies in the world, it's the product that helps establish the brand. For example, when you think about people who are buying Teslas, they didn't buy Tesla cars because of Elon Musk. But they buy Teslas because of the design and the mastery of electric vehicles. Now, many people buy the Tesla stock because of Elon Musk, but when it comes to the product itself, nobody would buy a bad product even if they have a good CEO. Another thing that the CEO talked about was that people want a fully digestive product. And so no matter the circumstance, they want to build models that reflect Foundry and build new products that are devoted to other sectors. And this will create a whole new TAM for the company. Because especially if we think about smaller businesses, they won't be able to buy the larger product, which is Foundry. But if they're able to get a small product and that helps build the business moving forward, then they would be able to buy Foundry. Now, what does all this sound like? This is very similar to what Apple did when it came to their products. You can now connect your Apple TV to your iPhone, to your iPad, to your MacBook, and that's not including the Apple Watches and the AirPods. And that's why I think that this is a huge opportunity for Palantir, because the more smaller businesses start to see what Palantir can do, those companies will grow exponentially, and that will lead them to purchase the full Foundry product. And speaking of the complexity of Palantir's product, it's difficult to get people to buy the product because they think it's too pricey without being able to comprehend how this will improve their overall business. But now that other companies are seeing the effects of companies who use Palantir products, they're starting to believe that it is worth the investment. Now that means that Palantir is going to be able to raise their prices moving forward. But we're just going to have to see what big deals come out for Palantir in this upcoming year. And speaking of testing the product, Karp said that the pilot phases are taking days now. There are so many people who are amazed with this product in such a short amount of time. And the fact that Palantir doesn't have one specific sector that they're focused on gives them a huge opportunity for revenue growth over the next 5 years. When we look back a few years ago, Palantir used to be focused on the manufacturing sector. But now that other companies are looking at the different use cases like Airbus, they want the product as well. So Palantir admits they failed to sell to people when their technology was years ahead of competitors. And that is why they're hiring more salespeople now than ever before. But now they need to start getting their product out to more clients. And that is why I believe that Alex Karp is so confident that they will be able to achieve 30+% revenue growth over the next 4 years. The last thing that I want to say is that when you consider many companies' guidance for this upcoming year, this is going to be a hard time for many of them. And this is going to be a good sign for Palantir, because not only are companies seeing the success of the Foundry product, but with the difficulty to grow, many companies could be looking to Palantir for the best solutions over the next couple of years. So we could easily see growth over 30% in the years to come. But I hope you guys enjoyed this video. If you don't mind, would you consider destroying that like button? That helps this channel immensely, as well as comment down below your thoughts on Palantir's earnings call. I would love to hear your thoughts on that. And if you are new here, hit that subscribe button down below. That way you are notified when new content comes out. Hope you guys enjoyed the rest of your week, and we'll see you in the next one.